This is the briefing for Monday, May 6th. I want to apologize because I did not send out a briefing over the weekend. I had to go out of town unexpectedly on Thursday and was unable to do a briefing. Didn't have access to my charts or the market at that point in time. But I'm going to take a little bit more time today and kind of catch everybody up. I want to talk about the fractal nature of the markets and understanding the development of price in multiple time frames. This is a daily chart of the spiders. I'm going to use it as an example. Now, we know that this was an uptrend, a series of higher highs and higher lows. This was a greater degree time and price counter-trend rotation. In fact, let me show that very quickly by switching this to a weekly chart. So you can see this is a run, this is a pause. And if we go back to a daily chart, you can see that this was a series of runs and pauses, run, pause, run, pause, run, pause. So then the question was, we reached this low and we kind of came right down into this 496, 497 area. And then we started this rotation back to the upside. Now I'm going to go down to an hourly chart. This is an hourly chart of the spiders, the Qs, and the Russell, the IWM. So I'm going to expand this spider chart just a little bit here to show an example. Now, when we came down into this level and we reached this low coming in right at 494, we started this rotation back up. And we got this move up to here, then we came back down and then started back up again. And I covered this in the briefing as it was developing and suggested that this could be developing into a three-step counter-trend rotation. Now, one of the characteristics of a counter-trend move is sometimes they develop into three steps. And sometimes there is equality between legs 3 and legs 1. Not all the time, but sometimes there are. And what it does for me is it gives me an area to look for where I could potentially see a turning point. Now, I did the numbers and did it in a briefing. You can see this is 3 legs. This is 1 leg, 2 legs, 3 legs. And the leg 3 projected equality coming in right at the 507 area, which is exactly where the spiders came to. Now, the Qs, I don't think the Qs made it to that point. I think they were shy by a little bit, and I think the Russell was shy by a little bit also. But this gave us then the indication, or at least a strategic advantage to suggest that, okay, we have to expect some type of a rotation back to the downside, or this is the beginning of a new uptrend, and this counter trend rotation is complete. So as we came down, we came back up, did not take out this 507 area. Then we had this gap down, and we kind of held right at the 497 area. Now you can see it right there on that day, 425. We had a buying tail that came in, and then of course started driving price back up. So that then suggested that this potentially is developing into a more complex counter-trend rotation where this is leg 1, keeping in mind the fractal nature of the markets. This is leg 2, and this is leg 3. And last week, I put this red trend line up here to suggest in the briefings that would be a typical stopping point where there's equality between legs 3 and legs 1. And that area came in right at the 511 area, which the spiders came right up to it and then started back down again. Then at the end of last week, I also talked about the fact that once we started back down into this move here, it was going to be critical for this low, leg 2, to be taken out. If leg 2 isn't taken out, then there's a high probability that something else is happening. So what could be happening now is that while this was a fractal 3-step counter-trend move, this was a 3-step counter-trend move in a greater degree time frame. This could be developing into another 3-step counter-trend move. So keep that in mind. Now this could be leg 1, this could be leg 2, and this could be leg 3. Now you might be wondering, why am I focusing mainly on this being a counter-trend rotation? Is because counter-trend rotations typically occur with lower volume. And if you look at just the spiders here, if you look at this move here, you can see that volume was falling off except for the down days. you can see that on this move here, you can see volume falling off. On this leg here, volume falling off. So that gives me an indication that volume is not coming into the market, that new buyers are not being drawn into this move, and the fact that the market fuel is basically volume. This tells me that there is still a possibility that this is a more fractal in nature counter trend rotation, and that potentially we could see another move to the downside. Keep in mind, there is always an alternate probability, and that would be that this is the low, this counter trend move is done, and this is developing into something that would go up and test the all-time highs and take them out. What would confirm that potential strategy would be to continue trading above these levels and see volume beginning to increase so that the trend is attracting new buyers. If it's not doing that, then of course that would suggest that something else is in the process of developing, which would be this is still part of a larger degree counter trend rotation, keeping in mind where this is leg 1, this is leg 2, and this is leg 3. Now I want to go back to the spiders here. This is a daily chart. Now I did the work or the numbers of this being leg 1. This is just what we looked at in the 60-minute chart. This is leg 2, and it projected that leg 3 would complete right around the 517 level, and that's where I put the red trend line. Now you can also see on a daily chart, this is volume on this part of this leg 3. If it is a leg 3, this is volume that is falling off. Now, breadth has held up fairly strong, so that's a positive for the market, but this is very concerning that volume is falling off. In fact, this yellow trend line is where the average low volume has been going all the way back to the beginning of this year. So this tells me that potentially this move here may be waning, and to be aware of the potential for some type of move to the downside. Now in the Qs, I did the same thing. So you can see this move here, this is a leg 1, this is leg 2, and this is leg 3, comes in right at 440, and you can see the Qs made it right to 440. Look at volume in the Qs falling off, and falling off pretty dramatically. We've got a slight divergence in the market, in market breadth, not anything that I would put a lot of credence to, but there is a slight divergence in that as well. In the Russell, you can see this is leg 1, leg 2, leg 3 came in right at the 204 area, and it exceeded it slightly. The next level of resistance is about the 205.50 area in the Russell. Look at volume in the Russell falling off also. So this gives me still some type of indication that potentially we're going to see another move back to the downside. What will be critical to that move will be taking out leg 2. If we don't take out leg 2, then something else is in the process of developing as well. This being leg 2 of the larger degree time frame counter trend rotation, which comes in right around, let's call it the 500 area. In the Qs, it's going to be this level right through here, about the 420.5 area. And then in the Russell, it's going to be this level right here, right around the 195 area also. So keep that in mind. Now, the market did not take the financial news last week or the employment numbers, the FOMC announcement or the employment numbers as bad news. Obviously, that caused it to develop into this more complex counter trend rotation, which is a greater degree time and price counter trend rotation. Looking at where we are in terms of overbought and oversold, we are overbought in the NYSE and slightly overbought in the NASDAQ. Now, this indicator gives me an indication also that potentially this would be part of the analysis that we could see some type of pause or some type of move back to the downside in tomorrow's trading. Now, keep in mind also that once we break through, or if we break through this upper trend line where there's equality between legs 3 and 1. If we break through that by very much, then that's going to eliminate that part of the analysis and suggest we're going back to the highs. And that's just pure and simple at this point in time. Looking at total volume, this is total volume on the NYSE. You can see what's happening there. It is absolutely declining. Total volume on the NASDAQ absolutely falling off pretty dramatically. So unless or until we see volume increasing on any move to the upside, I would hold in the back of my mind the potential of this being a three-step counter-trend rotation in a greater degree time frame, and the potential that we're going to see some type of move back to the downside. I would say the probabilities are still 50-50 right now as to whether this is the low and it's done and we're going back to the highs, because this market certainly doesn't have any selling pressure in it, at least at this point in time. It did back here, but right now it does not. I'm going to pick this back up again tomorrow night for subscribers. Have a great evening, and should be a very important day tomorrow, because if we trade much above these levels where it would violate equality, that would tell me that potentially we're going to see some type of move. We're going to see some type of test of the all-time highs. Volume has got to be key, though. This market is going to have volume. And then, of course, if we see the volume coming in, as we did on this move to the downside, that would be important as well. So volume is the key, and what we're doing now is just looking at chart patterns and seeing if they're going to be fulfilled or not fulfilled. Have a great night.